Hey guys, what's up? Alright, quick stuff we do in this morning is yeah, you know why I'm late. Shouldn't be. To we got in a pretty good self. On the structure this morning was type of high risk. Most importantly, looking for opportunity to get back into Tesla. The results were pretty good. Got out of a single and I have 3 more shares only. Buy what you could afford. I have every daily chart up. See that big pop, that's $50 in like 5 minutes. We had that as a target. It's a pretty easy target to set on for one of these singles. To the upside. I have one option, but I know a lot of you guys wouldn't know how to trade that option. I had a full option out to own. So that option is what out of the money. A 90 option. And there's your 300 target. Boom, 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 boom. Let's wait for it to come back down. Right, yeah. At 78 80s. I have 2 waiting shares right there at 80. Stops behind 70s. Right here. So just wait and wait. Tesla is something that I have a long term. It doesn't mean I can't enter in and out of the market. You can see right here the market opens. Bing. Boom, boom, boom. Right. So enough about Tesla. We'll see if we get filled on that 80 today. Back in lock zone, value area high, 1037. Just waiting to see if this reacts enough. 97 is all played out. Late push yesterday evening. We got in a little bit a single on the 302, got out of that and broke even on the second 97 that we held. I think I posted some labels on top step on how I managed through that. Close on a contract roll, stops down once we got the 8 points on that, but stopped out on the secondary at break even. So made a 8 points yesterday. Had a single sell here this morning at 12. Got our 8 points already. So this is where it becomes tricky now. Okay, the sell-off was deep considering what the volatility is. Where is my tools? Don't know what is wrong with my mouse. This is up. I think the sensitivity is a little bit too high. What's up? Oil is still pushing to the upside. Sit on my hand a little. Our favorite number. Sitting here with a single. So you can see we London trade this morning. I just see where the push came back down, so we enter on the retest. Bam 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 bam. Have a single sitting like at 98. Hopefully might get filled. Don't know what the hell is going on with this stuff this morning. Looking for greater than 1-to-1 on the street. Point stop. .8 profit. Use here as support. Idea support. Idea is your break to stop. Looking this way, 8 points on a single. Notice we get lucky on 98. Nice if we do get filled. Today is Thursday.
Good morning and welcome, traders and friends, to the market forecast for Thursday, October the 24th. I'm John Hoagland, As always, thanks for trusting me with your time. Hopefully you're having a good trading day already. It is Thursday. We've got today and tomorrow left to finish this week strong. Let's do so. Starting with economic releases this morning. The durable goods orders came out this morning at 7:30 a.m. Central Time. A little bit lower than expected. Jobless claims also at 7:30 a.m. this morning in Central Time. Continuing jobless claims a little bit higher than expected, but initial a little bit lower. New home sales due out at 9 o'clock Central today, as well as the natural gas release due out at 9:30. We're going to be looking for context in these markets, see if we can't find some decent opportunities. Markets moving already. As far as news is concerned, Tesla is the talk of the town, returns to profitability in quarter three. Twitter, maybe not so much, not doing so well. U.S. equities cautiously optimistic this morning, set to open higher on earnings news. Mario Draghi has his last meeting this morning with the ECB. Press conference was at 7:30 this morning, again in Central Time. No changes in policy, though. As far as earnings are concerned, we get the busiest day so far here coming. Before the open, 3M, Comcast, American Airlines, Northrop Grumman, and Twitter, just to name a few. And after the close, we have just a few of them. Again, Aflac, Visa, and Amazon due out after the close. Amazon tells us we can have it all, and we can have it delivered. Why don't we go ahead, don't forget to like, share, comment, question, feedback is always appreciated, as well as a good heckling I do enjoy. Why don't we go ahead and take a look at these charts, see what kind of context we can find, and see what we can find for opportunities throughout the day today. All right, so crude oil, pretty big upside breakout yesterday, crashing through this trend line, crashing through weekly kickoff high. I think I mentioned yesterday morning during the forecast that we did not want to fight this move to the upside without some sort of way to gauge risk on a contrary trade yesterday, and none of them would have paid off very much. We were looking to buy weaknesses in that day, in that move to the upside yesterday. So again, hopefully nobody got it in their mind that they were going to be able to pick that top yesterday. So we had our first draw in crude stocks in 5 weeks. Medium time frame upside trend continues. We're continuing to put in higher highs now, continuing to put in lower lows. Take a look at the 30-minute chart this morning. Okay, we have are we in the right spot here? 66. Okay, yes, we are. All right, so we did open with a slight gap. Our opening range was 56.10. The opening range low was 56.10. Looks like we just took that out by a tick. But again, you know, we opened out of balance, so looks like we're going to possibly close the gap right now. What's the high of the gap here? Let me give this a quick look. 07. And our low is 09, so we're trying to close the gap. We got within a couple of ticks of it. The opening range has fallen by 1 tick, but we're still out of balance and looking, you know, for opportunities for us for the day today. So our regular trading hour high, 56.36, might be an interesting opportunity. We've got this 55.90 previous weekly kickoff level here. This area where settlement is, 55.97, is a kind of a target-rich environment. We've got a longer-term inflection level right here at 55.90. We've got value high right here at 55.95. We got settlement at 55.97. We have yesterday's high here at 56.07. So again, this does look like an interesting area for an execution. There's a lot of convergence in levels in this area. If we can hold here, I'll look to buy this weakness and continue our move higher. If we can't hold above this 55.90 level, maybe a move back to 55.20. But we have a naked point of control from yesterday's very emotional move to the upside. Taking a look at the volume here, we put in some pretty good volume on that move to the upside. Where I come into a little bit of caution for continuation is we only added 1,500 in open interest, only 1,500 new contracts on a big up day like that. It doesn't encourage me to believe that there's a lot of money coming into the long side, which might actually be a good thing for continuation to the upside, because if we continue to push, we may push longer, stronger money into needing to adjust those inventories from maybe not long enough, maybe too short. It's going to be an interesting trading day. They always are. Just taking out the opening range here. So we've closed the gap to the tick. Yesterday's high of the regular trading hour session was 56.07. Our current low, 56.08. We'll see if that holds. Interesting area right here, though. This is kind of a target-rich area. S&Ps. Okay, so here we are. All-time highs. Unable to reach all-time highs back here in the end of September. Here we are near the end of October. We're still pushing all-time highs. We're within a 1% of our all-time highs. How is it going? What is the attempted direction of this market? How good of a job is it doing getting there? Well, we're putting in higher lows, higher highs, at least for now. We don't know what today is going to hold for us. Looking at this trend line, this 30-20 level, as an important area for possible continuation to all-time high in the December contract. Again, will be 32 quarter, and again, this is the front month high that we're looking at. So, we've got a lot going on here. There's a lot of earnings coming out. There's a lot of information coming out. Trade has kind of fallen to the wayside as far as any kind of news is concerned. So if we don't get any bad news, the grind tends to continue to the upside in the S&Ps. So volume was not great yesterday, but on this turnaround day, we closed on our highs. We added 32,000 in open interest in the preliminary bulletin. That's a pretty significant addition to open interest on an up day. So it's kind of encouraging to me that happened on a day when we closed above this 3,000 level. We've been spanning it for a few days. It was resistance. Spanning, will it become support? Well, time will tell. That open interest increase, I think, is encouraging for continuation to the upside. There's plenty of visual resistance above. Again, this trend line, our all-time high, our September high. There's a lot going on up here, so it's going to be a little bit of a sticky area, quite possibly, without some sort of good news or impetus to really push us through there quickly. Taking a look now at the 30-minute chart, we are going to be opening with a gap. We're going to be looking at, when we were talking yesterday about this triple top here from, what was this, Tuesday, this triple top and this high here in the overnight are kind of exact levels. These are weaker time frame levels that shorter time frame traders tend to take those trades against, and the most interesting thing about it is it really leaves no sign of excess. Our upside auction on Tuesday did not finish. Will it finish today? Looks like we're going to be opening very close to that level. Watch the opening range. If the opening range remains the low of the session, I'm going to look for the market to continue to look at that 30-20 level and perhaps prices higher. If we can't hold that opening range, if the opening range holds at the high of the regular trading hour session, we do have some longs in this market up against resistance. We may see the market come back and check back down to settlement to close the gap. Anything you do, make sure you are managing your risk well. Look for opportunities there where the market, if price gets to this level, maybe this trade is wrong and I need to get out. Trade as close to those levels as possible. Taking a look at gold now. Gold is a bit of an enigma. I don't really see too much opportunity.
What up,
here.
Hyperchange?
When we
Welcome
look
to
at
another
the daily
episode.
chart,
Today
we can see, yes, it is coiling. We are relatively close to an
What up,
important
Hyperchange?
inflection level.
Markets
and
are
that's
going to get
15.02
dropped that we're not
weekly
even
kickoff
thinking about,
high.
you know?
Yeah.
But we have an inside
Yeah, for sure.
day
I mean,
in
for me, like the
extended
biggest
trading
things I
hours
just kind
in
of wrote
large
down, like
part.
what I'm
We
watching
did
for.
extend a
So
little bit below
model Y status,
yesterday's
Gigafactory Shanghai,
extended
obviously.
trading hour low.
I think
We
there's
seem to be
hopes
headed
that
back
that's
to the
starting production,
upside,
you
but
know,
there's really just not a
anytime
lot
now.
of
So-
Yeah,
direction.
we didn't even talk about that.
Or,
That's
information.
So hopefully
in
we
my
get an update
opinion,
on that.
coming from this market yesterday. However, we did add 13,000 in open interest on an up move. Volume was okay, not great. We still seem to be cutting off volume over time the longer we stay in this area, which makes sense. Take a look at the 30. I'm going to be reminding everybody, as I always seem to do, is to stay patient. Patience. The market is in value from yesterday. Market, has looked lower. We had some shorts in this market overnight. Those shorts are now out of the market. Market seems intent to look to check possibly yesterday's regular trading hour high. We're at yesterday's value area high, and these are short time frame levels with which to take opportunity, because we can again limit our risk. These are short time frame levels. Short time frame traders look to them, keep that in mind. But again, I'm going to just suggest trying to stay very patient in this market today. There's very little change in the perception of value for an ounce of gold. The euro, some changes coming here. Okay, we've been suspecting that this might end up being a bull flag. Well, our overnight low is pretty much right at that trend line. We are holding above. There is the possibility that this market could technically continue to the upside. There is, information coming from the ECB, the meeting today, Draghi, all of those things will affect this. I'm going to take a quick look here at the 30-minute. So here's that bull flag. We broke out to the upside almost yesterday. Overnight, we had a pretty decent move here as the ECB announced they weren't going to be doing anything, but we seem to be holding this trend line as support. Our opening range, almost the low of the session. The low of the opening range is 111.64. But it did get taken out by just one tick. That tends to happen sometimes. So the opening range still has some sort of validity in today's trade, especially because it's so close to this trend line. If this market does become directional to the upside, I'm going to say what I said about crude oil yesterday. Do not fight a directional move. I'm going to try and again stay relatively patient, because this area is there's a lot of information in it, so I really want to try and stay patient. If I get the opportunity to look for an entry down anywhere near this trend line, I'm going to be very excited to have that opportunity. Our overnight high, our overnight low, of course, relatively wide today, pretty decent overnight range, which kind of loosens things up for us. And again, try and stay patient. If this market does become directional, do not try to fight it. All right, so where are we here? Hey, we're about 1 minute from the equities open. I'm going to go ahead and take my deep breath. Stay cool, stay calm, stay humble, grateful, and creative in your trading today. We got a bunch of questions. Oh, all right. All right. All right, so Rogerio, good morning, everyone, by the way. I don't think I gave everybody a fine good morning this morning. So good morning, Andrew, Alan, Mason, James, Jim, Rob, Rogerio, George, Piples, Ezekiel, good to see you, Ezra, and Matthew. Rogerio, Hogan, he has to have a hard time buying when the market is like this. Would you say waiting for a clear retracement is a safer long entry at the cost of missing a good trade? Directional markets have always been a challenge for me, Rogerio. It's so hard to know what is a good pullback. How far is it going to pull back? We're looking at buying equities at near all-time highs. It's always hard to do that, so I get it. When the market is strong, and I believe the market is strong, it's difficult to stay patient and wait for an opportunity to buy it when it looks weak. My dad was a trader for 40 years, and he always used to tell me, the market always looks worst at the bottom and best at the top. When the market is directional, it's usually a better idea to wait for some sort of pullback. Sometimes I'll look at like volume profile if the market is continuing higher throughout the day. There'll be little pockets of volume, and if I can get a pullback to the low side of that little pocket of volume, sometimes I find that is useful for a pullback. So maybe something we can talk about later on the recap. Okay, maybe we'll get a good example of how that may have worked for us today. But just barreling in and buying the high out of fear of missing out, you're probably going to just be taking a lot of heat. And pretty much every time I do that, I put in the high. So avoid doing that. Z-Trader, I've noticed the desktop version has several versions behind the web one. Can we get the update? Z-Trader, I'll take a look at that. Maybe we'll have some sort of a response to that in the recap. Isaac. Oh, okay, yeah, you're right. On the login page, there's a place where you can update to the current version. Okay. All right, thanks, Dan. And thanks to all of you. Looking forward to seeing you back here for the market recap at 2 o'clock Central Time. Get out there and profit. We already did our deep breath, but as soon as I'm done here, I'm going to take another deep breath and see if I can't find some good opportunities. So trade well. We'll see you back here at 2 o'clock.
My name's Darren, top step funded trader.
Hello traders, it's 8:01 a.m. Chicago time on Thursday the 24th of October 2019. This is episode number 1624. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, overall risk appetite, we're seeing a pop higher in equities and risk assets. The leader this morning is the Nasdaq, up 45 points from yesterday's settlement, followed by crude. Crude had a pretty good sized push up yesterday and is continuing the push higher this morning. Crude's up 30 cents, trading at 56.27, expecting a test of $57.11 in crude at some point here soon. It's the next logical test area, likely test area. The DAX is up 48 points. The laggard today is the bonds. The bonds are off just a bit, 6 ticks. The treasuries are off 2 big ticks, and gold is pretty much flat, trading at 1495.8. So that's where we stand. Just a slight risk on sentiment. We did get some news this morning out of China wanting to buy $20 billion worth of agricultural products in the U.S. Looks like they're just trying to push things along. There's been a little bit of volatility in the overnight session around the the European Open. And currently ECB's Draghi is speaking, so be careful if you're trading products that are impacted by the euro or the ECB. But we did get a whole bunch of earnings out of Europe, Germany, UK, and so on, have reported and caused a fair amount of volatility as well. So that's that. Really, the theme is still the same. It's still just standing by and waiting for the market to do something. Yesterday, although we had pretty good price discovery, we ended up having somewhat of a balanced day. I'll go over that in a minute. In terms of what's ahead of us, again, it's the ECB rate decision that came out about an hour and 15 minutes ago. And then Draghi is doing his press conference. Currently, durable goods came out a slightly worse, negative 1.1% versus negative 0.8% expected. And for the rest of the day, we don't have any high-tier releases. We do have some releases, though, at 9:45 Eastern. Market composite PMI, manufacturing PMI, and services PMI. At 10, we have new home sales. And, and that's that. Looks like we're having a monthly budget for September on this calendar every day. Fed's Williams speaks at 7 p.m. this evening. So not much on the calendar is the bottom line. Just pay attention to what Draghi's saying here if you're involved in those products. Let's take a look at what was expected yesterday versus what we got. Here we go in our review segment. Yesterday, the primary expectation is a continuation lower. That's scenario 1. So I was looking for responsive buying into 3,000, getting tangled up in the 29.95 or so area, 29.98. And then I was looking for a lower low to the prior day. The secondary scenario is potential for a push down, but ultimately, right? So that's where we stand in 3 months. That's how things are flowing. So you can see that these areas coincide with my stock zones, which are on my book map already. So these stock zones coincide with these liquidity areas, and that's what I like to see, to be able to lean against an area that the market is likely to test or likely to have a hard time pushing through, except that I have to take context into account, and I know that I'm not going to be fading.
Okay, I want to start with you because no one really expected Tesla to post a profit in this quarter. They did. How did they get there, and do you think that it's sustainable?
Yes, we think they're getting there because they are in such a nascent market right now that something called Wright's Law is at work. And that says for every cumulative doubling in units produced, costs decline at a similar percentage rate. In the case of Tesla and the auto industry generally, it's been 15%. So it made a lot of sense to us that the cost of the Model 3 came down by $2,000 per car. That's right in line with what we expected.
So they're becoming more efficient here, but we did see revenue decline in the quarter by about 8%. Is that concerning for a company that really, by and large, has traded as a growth company?
Yes, so I think at this point, revenues, like year-on-year revenues or quarter-on-quarter revenue growth really depends on how the ramp-up of Tesla as a manufacturing facility is stacking up. So it's not a big deal. What's really important is the fact that they produce less than 100,000 cars. Their flagship model, where usually all the profits are down from their peak by 40%. And their new high-volume car is barely 1 year old in terms of mass production. And despite that, they print a high-teen gross margin, which is like leading the pack in the industry. And they focus only on electric. And any other car manufacturer will tell you electric is not profitable yet. So that's where they're onto something. That's where the stock is squeezing up. They're onto something, and the street is now trying to figure out what it is.
And in terms of the street, obviously we've seen a huge reaction today. The stock up more than 16%, on pace for its best day since 2013. But you've also got a company with some of the highest short interest as a percentage of float of any company that's out there. About a quarter of Tesla stock is out on loan, in order to be sold short. So how much can we read into today's numbers, Kathy? Is this more of a just unwinding of some of the short positions that we might see?
Sure. I think the shorts, some of the shorts are covering. They're stretching to make a negative case now. They're trying to figure out, is there some accounting gimmickry here that has caused this upside surprise? And as we dig through the accounting and the numbers generally, if you look at the revenue growth year to date, 21%, unit growth up 65% in an auto industry that is declining. We think total auto sales have peaked. So this is quite dramatic, and I think the shorts are going to be forced to cover as time goes on.
Well, unit growth is fine, but I thought the point was to create a car that they could make some money on, right? I mean, They keep getting cheaper and cheaper. What does that do to the long-term model? Yeah, their gross margins surprised considerably, up more than 300 basis points. Quarter to quarter, we think, and so they're at about 22.8%. If you exclude deferred revenue recognition and credits, it's still up 300 basis points to 19.7. We think that number goes to 30%, could go to 30% in the next year unless Tesla chooses to cut prices faster than they have been cutting them. And what's interesting about that is, given its lead in battery costs relative to any other electric car manufacturer, every other one will have to, if they want to keep up with Tesla, will have to sell their electric vehicles at a loss. At the same time, they're losing their internal combustion engine-driven business. So it's quite problematic for the rest of the auto sector. Who's closest on their tail right now? Is it Volkswagen, Porsche? Who do you think they see first in the rearview mirror?
I think nobody's close, to be honest. Tesla introduced in the market the Model S 7 years ago. And today, in what manufacturers have on the road or have announced, nothing is matching the 2012 Tesla Model S. And the Model S of Tesla today is actually 40% better than 7 years ago. So that's how Tesla turned from being like a disruptive innovator 7 years ago to actually an industry leader. They have 7 years of experience others don't have, and I don't think anyone is close to them.
And one other thing I'd add is there's another leg to this story. It's really the most important leg. It's autonomous. And we think that Tesla will be, or is in the pole position to be, the autonomous taxi network here in the United States. The margins, you talk about margins, the margins on a transportation as a service business, they're in the 80s. The
Why is that the case?
Why are they in the pole position?
Correct.
Yes. So
if you don't know who this woman is, Cathy Wood.
They've
She
introduced an
has
artificial intelligence chip.
somebody who
according
lives
to
in
our
Tesla as
analyst,
a
James
market
Wang, who
trader.
worked at NVIDIA for 9 years,
She
says
run
is 4 years ahead
Mr.
of
Barron, you
any
could say,
other
big
auto manufacturer's chip
guy
AI
in the
chip.
world of
And he would
trading.
know that because NVIDIA's
Understood.
okay.
Finally
they also
explaining to
have
them
10 to 12 billion
why
miles worth
you
of
would want to
real-world
be long on
driving
Tesla.
data. That is more than every other auto manufacturer combined by a multiple. For example, Google's Waymo has somewhere in the 15 to 20 million miles of real-world data, not simulated. That's not going to work for artificial
because they've got it in all these
intelligence.
cars that are out
Absolutely.
there.
If you're interested, search Cathy Wood if you're interested in who are actually speaking about Shia now. Her company actually owns some Tesla. Okay, guys, not much happening in the market. Missed my point of control by, don't know how come. It's too a little too cautious. So hold on if you see the retest. Okay, so that we have a certain idea on the to the upside. Just want to see if we got any movement right here at the open from the opening strike. We have 12 as the sell point. Same thing. So I expect it to be a range day. 6 point stops, 8 points profit. So I will know these two positions during the day. If anything happens, I'll probably post it up. On probably top set channel. So okay guys, have a good trading day.